All right, hey guys. It is July 8th, Monday. Another day in the book, so let's go after it. Let's get after it here. See what happened. It's kind of an interesting day. So the first thing I did was close out of the emerging markets calls or position. And I'll go over why I did that in a second. But are we on emerging? Yeah. I was at 7:44 this morning, Pacific time, so like in here somewhere. 7:44, yeah, so like right here. Those were $1.99 that I got filled at, that I started the position at, and I sold for $2.68, which is a 35% gain. And now those were the longer dated call options that I specifically bought for a breakout. And then it dawned on me that, I'm not in the business of anticipating any breakouts or any move or anything like that. I still think this has a good chance that it will break out. And if it does, cool. I'll look to get it back in. I have an alert set right here. Now, if this was more uptrending for a longer period of time, I probably would have held on to them. But the 200-day moving average is just starting to move up. I've got maybe like 2 months worth of it. Moving up, 50-day moving average is trending up. This is awesome all in here. I love this. This is really when I started getting into it. Actually, I first got into it like right here or something. I think it was this day. Maybe it was even this. Yeah, maybe it was even back here. But anyways, this whole sequence of trades was a really good one for the last month or two, whatever. And right at resistance, so I got out. Like I said, I still think this has a chance to break above 44. If it does, the likelihood of it running up is fairly high. But again, I'm not in the business of anticipating any move. So that's why I sold it. Yeah, it just dawned on me this morning. But anyways, moving on. Silver. Back in silver. That's exciting, huh? Silver. So this didn't pop on my radar until like at the very end of the day, and this area looks pretty good right around here, right around 28, because remember when I got into this a couple days back, I sold right at 28, which is what I thought resistance was. Now we're back right around there. I understand that there is a pretty big gap to fill here, but sometimes what can happen is gap ups are super bullish. So anyways, we have a lot of potential catalysts this week. I think tomorrow there's a treasury auction tomorrow, as well as Thursday. Jerome Powell's testifying tomorrow, I think. I think there's like CPI report that's coming out. And so there's a potential for a lot of catalysts. Now, I don't have an opinion one way or the other that those are going to go. I just don't. I do know that we are in election year. Every single report that has been put out has been revised worse later on. So like a month later, it's been revised, lower or worse. Obviously because the data is BS. And I don't expect it to change. in this book that I'm reading. It's a really good book. One of my favorite trading books. I haven't read it for a while. It's called Tao of Trading. Really cool. Really good book. In there, he says, don't worry about things that you can't change. You have no control over. You know? And he specifically mentions, like what Jerome Powell will say or any of those things. So basically, this fits my criteria, my criteria of entering a trade. So we'll go after it. Now, with all of this catalysts that are coming up, it is a general rule of thumb where my position sizing is very light. Because there can be massive volatility during the day, and I don't want my emotions getting involved in any of it. So generally speaking, the position sizing is very light. Calls September 20th, $27 strike price. So in the money. That's 74 days to expiration. $2.19 is where I started that position. Those are currently at $2.17. Alrighty. Moving on. Oh, price target for these. First one would be 29, and then let's do a little Fibonacci dealio right here. Is that where I think? That might be a little bit too low for my liking. Let's do 29 to here. So then next target would be 31. Oh, $30.50. So that seems about right to me. Yep, first target 29, then $30.50. That seems right. So, anyways, moving on. We are now gonna go to more exciting stuff. Where do I want to start? Yeah, so we'll start with we'll go to Amazon. Still in this one. Today, interesting day, just like Dow Jones, industrial average, right? Nice spike up this morning, and then sold pretty hard. Down here, on the daily chart here, is looking like it was starting to roll over. So starting to plan on my exit strategy, depending on, the close and what would have happened. But I'm still in it. Pretty good close, I guess. Whatever. See it on a 4-hour chart. Yeah, it's whatever. 1 hour. Yeah, never mind. None of these are swaying my opinion one way or the other. Even on this daily chart, I'm kind of like, whatever, I don't know. August 9th expiration, so that's 32 days out, $200 strike price. I started that position at $10.35. That's currently $9.07. I believe Jeff Bezos is very close to being done selling all of his shares. There's like $6 billion he's selling. I think it's $6 billion or $8 billion. What's the difference of a couple billion? But I think he's for sure 100%. He's halfway done. Probably a little bit more than halfway done selling all those. Now, do I care if he's selling them or buying them or whatever? No. Again, I can't control any of that. I don't make my decisions based upon that sort of stuff. But however, all else being equal, there's currently a lopsided 6-ish billion of shares that are being sold. So all else being equal, then once those are done, it would be logical to think the price of Amazon would move forward, move up. But again, you don't know. But that's just a logical conclusion you can make. So moving on, Amazon, Dow Jones, another interesting one. Oh man, this thing, I have been in this one for a little while. Maybe I got in back here. Forget. Somewhere in here I got in. Yeah, I think I did get in actually right here. I think it was right here. Yeah, all of this in here, see, this just bleeds time premium in here. And that's why I prefer longer dated call options. But anyways, we are in August 16, so that's 39 days to expiration. $390 strike price. Started those at $7.90. Those are currently at $8.77. Again, nice morning, and then things just got sold really heavily. I think a lot of this was because of something going on with commercial real estate. There's something going on with commercial real estate. A couple articles that I think I saw. I didn't really read. I did listen to some of them. But there is like some fraudulent stuff happening in commercial real estate that people are reporting anyways. There was it JP Morgan was involved in a deal where the proof of how much cash flow this commercial real estate property was producing was essentially just somebody wrote it down on a piece of paper or some crap. It was like a $250 million loan that JP Morgan had written. And again, I mean, they've already offloaded that, right? So it's kind of, it doesn't really matter for them. But anyways, there's more cracks that are happening in commercial real estate. So we'll keep an eye on if that's going to continue to get worse or not. Again, no sell rules are broken. So I'm still in it. Man, this was really close to where my price target would be. It'd be like $398. But anyways, still in that. Now we'll go over to, again, I mean, I do like this chart a lot, but, strength has been sold in the Dow, which I don't like, but it's still pretty good. So now going over to Robinhood. Man, if Bitcoin could stop selling off, if the Germans could stop selling their Bitcoin, that would help out with Robinhood. But man, is this thing starting to kind of roll over. Interesting, right? Yesterday, or what was this, Friday? Really strong close. And then today, not. Again, like I said, anything below 22, I would sell and get out. Or a close below 22. Super close today. Again, I thought, I'm about to sell this. But that closed below there. So, still in it. But this thing's barely hanging on. Let's see what Bitcoin's looking like. I mean, it's gotten supported, but clear downtrend. So, no opinion on it. I could form an opinion, but it's not like I have money in this. Well, in terms of in my brokerage account that I trade, we'll put it that way. So the opinion, therefore, is less meaningful. So we're still in this one. Let's see. Robinhood. September 20 as expiration. That's 74 days. $20 strike price. $4.08. Those are currently at $3.75. So, yep. Moving on. O3 Harris. Look at this thing. Just blasting off. Again, this is all right here in this area of resistance. But it's acting fine. Like I've been saying, I could see how people would be selling in here. I'm still in it. Equity trade, this is a full position size. $219.77. Again, I started this back here and was adding for a couple days. As it was working, kept adding. Now, $228 I think is a really good place. Like I had said, back here, if I was trading options in this and saw this reversal right around 228, I would have gotten out there. But so, and anything between now and 232, I could see getting out. There is this kind of gap to fill. Maybe not much of one. Right around where I have that. But anyways, we're still in that. All right, moving on. XLF. XLF. Again, another unexpected day. In XLF, just like Dow. Those were two that I did not expect to act the way that they did. Especially with on Friday. That was nice. Got supported down there, and a continuation higher was what I expected, I guess, which is why I went long on Friday. Expected it to go down, so I went long. But again, I think there was all these reports of like bad commercial real estate stuff, and I don't know if that's anything new though. There's different talks of lawyers and stuff that have said, our banker friends are telling us to keep things quiet. But that's all rumor, and I have no freaking clue. I'm not in that industry, so I would have no clue if what they're saying is correct. It's just from stuff that I read. Now, what we do know for sure is balance sheets are contracting for banks, loan creation. So, I should have looked how many months in a row that's been. But banks are lightening up on that. So, there is some merit there. This is still fine. Still in it. Don't like the close today. Any close below 41, I would get out. So no sell rules broken. Those are September 20th, 74 days to expiration, $39 strike price, $3.20 Currently, those are $3.67. But again, I think that was an after hours thing, because I know for a fact right around here it was not, right before close was not $3.67. It was more like right around $3.20. But that's just after hours pricing. But I think it's because of this. But again, guys, so bad news that you see like over here. So, oh, this is funny. We need more bears to keep the bull market going. That's true. This is exactly what I was just gonna say. So right here, market correction highly likely before 2024 election. I didn't click on this to see anything more, but you want to see negative stuff. You want to see negative news during a bull market. There's an old saying that bull markets climb a wall of worry, and that's so true. You want to see bad news during a bull market. It's when you stop seeing bad news that is of concern. Now, there is certain bad news that is legit, that you do want to pay attention to. And over the years, I've narrowed my news sources down to pretty good, news that you can, that is a value. But anyways, you want to see these things. You want to see, bank loans or crap, commercial real estate's crap. We've got $27 trillion of commercial real estate debt maturing by 2027, $500 billion maturing this year. Defaults, blah, blah, blah. Commercial real estate's down. People are losing money. So, again, if that continues to get worse, obviously that's bad. And, basically all I'm saying is bull markets climb a wall of worry. They always do. Always, always. There's always a million reasons not to be invested. It's when those reasons where you can't find a reason not to be invested or to be long the stock market, that's when I get concerned. So anyways, moving on. Let's see what this guy says, because this sounds interesting. Downplayed the imminent recession risk, but cautions bearish sentiment. Yeah, see. And the other thing is, it's like nothing really makes sense anyways. So, let's move on to, oh yeah, not to get political, but you guys see this one? President Biden and his doctors have said a cognitive test is not warranted. Yeah, it's fine. That's definitely not biased in any way. Moving on. So Devon Energy. Wowzers. I'm still in this. Wow. That was yikes. All right. Got some support down here, I see. What the heck is going on with oil? Mm-hmm. Oh, yeah. I expected oil to be pulling back. Yeah, that's fine. $47.86 is where I started that position again. I started this a couple days late. I wished I started this like up here. I wish I saw this back here. All right, moving on. Goldman Sachs. Yeah, see this reversal today. Not expected. Equity position in that at $459.13. I started back here. Yeah, Still looks good. Still looks fine. We talked about bank stuff today. Definitely don't like that reversal though, you know. I mean, anytime strength starts to get sold, that is generally not a good sign. Let's look at the last time that this happened. Was here. Did it look similar to this? No. It's different. So, anyways, no sell rules are broken, so we're still on this. And so an equity position in Robinhood, $22.07. That's like dead even now. We've already touched on Robinhood and Bitcoin. Let's look at gold. Yeah. It's a good place to kind of start a position, you know? Good risk to reward here. Same thing with silver for the most part, although I'm going to have to be a little bit more lenient in terms of what I'm risking with silver. How's this looking after hours? It's up. Alrighty. And that was it for all the positions, everything like that. So now let's go over some futures trades. So last night, traded gold futures and almost got obliterated at 8:55 p.m. So we're like right here or something. Oh, this is AM. This is Monday. Okay, so this is last night. Oh yeah, it was right here. Right here. So I started a position right here at 2390.5. So yep, like literally right there. Tick higher. Then boom, got blasted. Was not expecting that. But I did add down here somewhere 2389.3. So yep, basically right here. Then sold up here at 23902. So basically right there. Why did I sell here? Because when price doesn't act as I expect, especially in futures, I just kind of get out. Right? Because if it got supported here and continued higher, that would have been very bullish. You know, and the fact that it kind of failed, you know, came back and was saved, you could make the argument that that too is bullish. However, I think it's a little bit less so. And so I just kind of cut it and get out, you know. Again, I'm not the best with trading futures. I'm still figuring it out. You know, this could be completely wrong, but again, I mean, I'm still figuring out what's working. But anyways, that trade netted $60 per sequence, right? Because, you know, so the first one would have been a loss of 3 ticks. Would have been a loss of 3 ticks. The second one was a gain of, you know, almost a full point. Is that 9 ticks? So 9 ticks, right? So, you know, that's a 6 tick differential for the good. All right. This morning, Dow Jones. Man, one of these days, Dow Jones is just going to really take off. What time did I trade this? Probably around here, 7:48. 7:48. Yes, I remember this. 7:48. I bought like right here. 52. Yep. So right here, 52. Sold at 61. Whoa. 61. That's 9 ticks, $45 a contract. Why did I buy here? Well, support right around 50. Anything below here I would have probably got out, right? Like 46, probably 47 maybe. And 60 right here, short-term resistance, so took the trade. Moving on. Then we went over to micros. I was hoping for another trend day, but it was acting all funky until close. And then we'll go over the close and why and how I missed this. So 66 to... Okay, so 9:30 in the morning. 9:30 in the morning. 62325. So like right there, and then I sold down here 617, so like right there, 6 points, so that's $12 loss per contract. It didn't continue up higher like I would have expected. So I get some good supporting action, kind of got blasted, sold it. Obviously it continued higher. That stuff happens, no big deal. Moving on over. Okay. All right. So as I'm still trying to figure out my future strategy, sometimes I'll mess with these micros again just to gauge target price, stop loss. Are they good? Is it completely out of whack? I don't want my emotions to get involved. So so is trading as light as possible is a good way to kind of see, are my emotions getting in the way? Are they not? Are the strike prices good? Are they not? Or the target price, is it good? Is it not? So anyway, so I bought this like way down here. 619. Yep, 619. Was like right here. And so here's a good example of emotions not getting involved. 619. So I bought right here. And then it really started selling off. And it didn't faze me at all. I would have gotten out down here, but I had no thought about this. And then in regular sized, in the minis, in the regular size contracts, I would have been like, oh shit, But anyways, so then I sold over here at 660. 660, yeah, so right here. 660. 40 ticks, and that's $20 per contract. And oftentimes when I'm trading these micro contracts, oftentimes I'm right, and the target price is good. I give it some room to work, and I often think, why don't I just do that with the regular size contracts? But again, I'll get there. This is still a strategy that I'm formulating, right? So I'm still skeptical and hesitant, right? It takes a lot of data for me to say, okay, this strategy works, so many months, right? It's not just like this worked this one time, or this worked last month, because this has been working, but it's been not long enough for full confidence in it. So we're still building, but that was a really good trade though. I was happy with that. That was a really good one. Dollar amount, insignificant, right? But again, that's not what this is about. We're building the strategy. So then moving on, then we go back over to micro NASDAQs. I think I bought like right here. 1118. Oh. What? That doesn't seem right. 11.18. Oh, maybe I didn't write this one down, but we'll talk about this one because I know I placed this, but it's just I didn't write it down. But 11.18. So this one was a winner. 11.18. 640.75. 640.75. So right here. Why did I place this? Well, this is good supporting action. Doop doop doop. Placed it here. Got out 647.75. So that's like exactly 7 points. Yep, 647.75. Yeah, like right here. Why'd I get out there? Well, that's right around resistance that I thought. And pretty much acted like it. 7 points, $14 a contract. And then a loser that I don't have written down, but I do know for sure, and I was upset at myself for placing this. It was somewhere around here. Oh, I think it was right here. Yep, it was like right here. Again, this didn't fully meet my criteria. I was kind of anticipating a move. That's where I got screwed. I was anticipating this to move back up over these moving averages and continue higher. And that's where I screwed myself by trying to anticipate. So anyways, so then it sold down below here and I got out. And price acted not as I expected. So then I wanted to place a trade here, but I'm like, shit, I already screwed this all up. I was like, I don't want to make any more mistakes trading futures today. And then missed very strong movement. And actually, as I was seeing this and like this volume coming in and just how much it was spiking up, I thought, man, this is strong. This is worth a trade. But then I'm like, nope, you thought that last time here and you're an idiot, right? Didn't work out. So, again, got to eliminate those mistakes so that way mentally I'm not burnt out, I guess, is the best way to put it. So, moving on. That's it for futures. That was it. Now, moving on to capitulation and elation. So, a couple things here is Hut Mining. Hut 8. Still absolutely ripping. I remember back here seeing this and thinking, wow, this is really strong close. It didn't meet all my criteria, and so I didn't go after it. But I mean, this thing that's like 70% or something in a month, maybe. It's wild because it doesn't make any sense to me because Bitcoin is been falling. However, with Hut 8, there's a huge trader placing 2026 some leaps call options on heavy volume. So, somebody always knows, right? So, he knows something. Also Tesla. Look at this. What a move. Bam. My rule of thumb is I never buy anything under the 200-day moving average. That's just a no-go. So I didn't go after this one. But man, cool. Elon Musk. He's stoked. And so for capitulation, I don't really have anything. There isn't really anything. I was thinking commercial real estate. But then again, these regional bank stocks kind of, if commercial real estate does continue to get worse, then I will go after this on the short side. because this is kind of rolling over and looking a little bit yikes. Barely hanging in. Are these kind of trading in line with bonds? Very similar charts, huh? Very similar. So that's something to keep in mind. Huh, interesting. Yeah, commercial real estate, or regional banks that have high exposure to commercial real estate are really kind of trading in line with bonds. Let's see what the US dollar is doing. It's not really doing anything. So anyways, plan for this week, I don't know, just kind of trade lightly. You know, I have my positions that I want. There's nothing really else that I want necessarily. So, yeah, you know, potential for a lot of volatility. Maybe not, never know. But, yeah, everything's all good with those. So anyways, bye guys. See ya.